When it comes to investing, not many Indians can escape gold's glitter. However, there are various forms of gold where one can invest. Besides physical gold, digital and paper gold are also in demand nowadays. But before investing in any form, an investor must be aware about the tax liabilities related to their gold investment. And to help you do just that, we have on board T P Oswal, international tax expert. Welcome to the show, Mr. Oswal. And let's talk about gold investment, where traditionally a lot of Indians want to invest in physical gold. Now, when you sell that gold, or when you want to cash it, what's the kind of tax implication are we looking at? Because it's very important to understand tax implication related to gold. A lot of investors just focus on buying it, and that too physical gold being their first preference. How can one understand the tax implications connected to it?
You see, the gold is one of the pattern of investment like any other investments. So if you are buying the gold and selling it, and if you hold that gold in a physical custody for 36 months, it becomes a long-term asset. And therefore, the gain arising on account of sale of a long-term asset is a long-term capital gain. And provided it is not your stock in trade. If you are not a trader of the gold, if you are a trader of the gold, then gold sale will be income from business, will be taxable at the full rate. But if it is a long-term capital asset and it is sold, your gain will become taxable at the rate of 20% plus applicable surcharge. If you are, and please note, the capital gains are now from the year 2022-23, not 23, 23-24 assessment year is tax. There will be no increase in the surcharge. Surcharge will be frozen at 15%.
This is all about the physical taxation aspect of gold that you mentioned. But then now a lot of investors are investing in gold through mutual funds, ETF, there is sovereign gold bond. We have digital gold also. Let's look at this one by one, Mr. Oswal. Let's talk about gold investment through mutual funds and ETF. Now, how does that work, and what's the kind of tax implication involved there?
Well, as far as gold in a mutual fund or ETF is concerned, the taxation, there are scheme under the scheme, the purity is only 99.5%, and under the ETF, minimum investment is up for 1 gram and 1,000 rupees, as the case may be. Income tax aspect of the sale of mutual fund and exchange traded fund, that ETF, are similar to the physical gold, which I have said. Long-term capital gain, if held for more than 36 months, less than 36 months is a short-term capital gain liable to full tax, and long-term capital gain subject to 20% tax.
You're an international tax expert, Mr. Oswal. I'm sure a lot of people come to you for advice and to plan their investments as well. You think, have you experienced people's interest in investing in gold as compared to physical demand has gone up towards mutual funds or ETF?
Well, when it comes to physical gold, when it comes to digital gold, I think people have a lot of preferences.
Okay.
Particularly the sovereign gold bonds are very useful. Gold fund is useful. People, and that there is a distinct advantage in a sovereign gold bonds, which are issued by Reserve Bank of India, and you can hold those bonds in your digital form, and that gold is much safer. And if you hold it for 8 years period and then thereafter sell it, that no capital gain tax is leviable, and you can exchange against the physical gold also at that time. So therefore, this is one of the best mode of holding the gold. So capital gains are totally exempted, but provided the holding period is 8 years, that you must bear with. And also, please note, if you are holding gold bonds, the government gives you 2%, 2.5% interest on the period of your holding. Whatever amount is credited to your account. Unfortunately, the interest received by you is subject to full tax, and therefore virtually 1/3 of that interest goes back to the government by way of a tax. So therefore, effective tax rate is not more than 1.75%, or maybe little lower than that.
One wants to redeem in say couple of years. Now 8 years is a lock-in period time, right? That you just mentioned. And
you can redeem after 5 years.
Okay, and that will be a full redemption or can be in parts?
No, full or partly redemption, because the certificate comes in the 500 gram, whatever the grams are, you can redeem partly as well. There is no problem.
And what will be the tax liability on
The
the
tax
capital gains?
liability will be, based on the holding period. If the period of your holding is say 3 years, then it is a long term, and the tax will be levied. Premature redemption of gold will be subject to 20% tax if it is beyond 3 years, and indexation benefit will be available to you in all the schemes which I have mentioned so far. If it is a long term asset and you are selling it, indexation benefit is available, and therefore, for example, if you last year, uh, every year government notifies index, and based on the indexation you can take advantage, and therefore your effective tax rate will be little lower than 20%. Every year the indexation changes, and therefore that benefit is available to you.
Explain us the calculation of indexation.
Well, if we have done calculation of indexation, particularly in a real estate. I'll tell you 2001. When you are holding the asset in 2001,
Right.
the today's indexation value of that is 333. So 100 rupees of 2001 become 333. And suppose you are selling at 400 rupees, your taxable gain is only 67, and therefore 20% tax on that will be 13 rupees.
All right, let's talk.
Despite the fact,
Yeah.
despite the fact you are selling at 400, the tax is only 13 rupees.
And what about the advantage of the 2.5% that you get on the market rate? What is that as in sovereign gold bond, I'm saying?
In sovereign gold bond, this interest is paid despite the fact that you have made investment. Actually speaking, you have made investment in cash in the bonds, and the money goes to the government, and the government therefore has agreed to pay 2.5% interest on your investment made in the sovereign bond. No other form of your investment will give you interest income on your gold investments, whether it is a ETF, whether it is gold bond, or whether it is mutual fund or physical gold. Excepting the sovereign gold bond, you will get this interest of 2.5%, and that becomes taxable. Advantage of this gold, holding gold is, first of all, it is risk free. You physical gold held by you is subject to huge risk. You are carrying up that at your residence, and if you do not have strong rooms, where are you going to keep the gold? Either in safe deposit or lock. Anyway, pure gold has no value unless you want to convert into a jewelry. And therefore, instead of holding pure gold, better to hold the gold in digital form. And the digital form, the best digital form is, which also gives you little bit yield, 2.5%, and that best yield is a sovereign gold bond.
Let's talk about digital gold, which is in vogue, which is in trend. We've seen a lot of exciting reports also coming this Diwali where people have shown tremendous interest in it. How does it work, and is it similar to buying anything online?
Yeah, the digital gold is a mode investing in a physical gold, like physical gold.
Right.
This is an instrument that allows one to invest in a pure gold in a digital form. The seller stores an equivalent quantity of physical gold in a secured vaults on behalf of the customer. And if one is sure of jewelry, he wants to hold gold in a physical form for any reason, he may buy physical gold as well. But if one wants to buy gold for investment purposes, better to buy digital gold in the digital form, thereby avoiding making charges, storage charges, and associated with physical gold. They can also take possession of the gold in a physical form or in coins or ornaments as and when required. And therefore, you can incur those packaging costs, etc., only when you require it to be, not till then. There is no upper limit on purchase of physical gold. However, maximum limit to buy gold in a single day is rupees 2 lakhs. Digital gold can be bought in a very minute quantities at a time. The digital gold as of today is not directly regulated. There is no regulation on that. In 2021, NSE and BSE asked all the registered members to delist from their selling digital gold either online or offline. And accordingly, according to the SEBI, such digital gold is not security as per Securities Contract Regulation Act, and registered member of the stock exchange can only deal with securities. And since digital gold was not a security, exchange members could not deal with the
All right,
digital
so
gold.
that's a lot about digital gold that you actually explained us. And although the bouquet has a lot of investment instruments when it comes to investing in gold, one really needs to understand the cost involved in it and obviously the tax implications. Thank you so much, Mr. Oswal, for removing time and explaining us all the nitty-gritties.